about a year or so ago, I started a series called A Million Little Things. And as I say each week, everyone thinks that a switch is going to flip and bam, you're a trader and you just make a lot of money and you just sail off into the sunset or whatever. The reality is it's really a million little things that you need to do. We were talking to Facebook group about missing a big winner. It's like, well, put in a hard stop to get you into something that you are intending to trade. Okay, just one little thing like that would help you to catch that winner. Little tiny commitment devices, as I've said ad nauseum. When I walk in the office, the market always seems to reverse while I'm at lunch or whatever, and I'll fire off a day trade unnecessarily. So now when I walk in the office, I have a commitment device. I have to write in my trading journal the time I walk in and WITO, walk in the office. So if I do feel so compelled to make an unnecessary trade, at least I documented it that I came into the office. And the reason that is, it's like, as you know, and that's another one of those million little things. I rediscovered the hangry judge effect. Okay, I didn't mean to go off on this. My apologies. But the hangry judge effect is that they did a study in Israel on judges that gave sentences before lunch and then after lunch, and pardons, etc. And they found that after lunch sentences were far less harsh than before, and they reasoned that the judges were hangry. Well, my problem is, because I like to eat, Big Dave, that's why they call me Big Dave, is that I'll go in the house and chow down, and I'm feeling good, come back in the office, and all of a sudden everything looks good. So it's so many little things like that from a psychological and neurological standpoint that you really have to wrap your head around. Anyway, number 408-552, forget about fundamentals, buy hot stocks. So where am I going with that? Well, I saw a meme very similar to this, and I forget exactly how it looked, but it was very similar. And I couldn't find it again. I didn't want to comment on it. I don't want to get in a pissing contest with somebody online. That's just a waste of time. But from my perspective, I would rather buy hot stocks than good companies, okay? The point they were trying to make was that everybody's looking for like an easy way or something, as opposed to just buying good companies. Well, you're much better off buying hot stocks than a quote unquote good company. So I am there first in line. So what is a good company? Well, I guess you could look at some of these fundamentals, or as I often call them, fundamentals, such as the balance sheet, cash flow, PE, ROA, ROE, PB, or I have no idea what all that stuff is. Okay. Value, okay. How do you define value, right? Do they have some kind of niche or some kind of demand for their product, or some kind of theme? Now, as I've talked before, you want to be really, really careful about chasing themes. But I will circle back to that a little bit, and maybe I'll confess a little on when you're allowed to chase a theme. Anyway, so fundamentals changed my mind. 95% of all mutual funds do not beat the S&P 500. That number is staggering. Yet they have hundreds, if not thousands, of people on staff, analysts. They have massive supercomputers. They have direct access to CEOs, okay? If it's a big fund, they can actually call the CEO and talk to him. So they sort of have inside information. Now, I just did a Google on a list of current value stocks, and this is the list that came up, and I'm not going to say where I got it, but you could find it online easily. And what I did was I went back to the first of the year for these value stocks, and this is the performance of them. Now, there were one that took off 64% right here. One was up 15, one's up 3%. But look at how beat up these stocks are, and maybe that's the argument. You buy stocks that are beat up. Well, that's a really bad thing to do. And remember, this, like the CNC, for instance, it's down 90%. Guess what? I bet at one point in time it was down 50%. Okay. And some of these in here that are down 10 and 20, if they go down, they may go down 100%. Who knows? But you can see the performance of the stocks. These stocks are really, really, really poor. And the only way to make money in a stock is to sell it higher than you buy. I didn't say buy low and sell high. That's a loser's game, trying to buy low. What is low? Nobody knows, okay? So if you take that list of value stocks and compare it to hot stocks, okay? Now, these are going back, this track date here, I brought back to the beginning of the year. So this is since January 1st. So ignore the track date here. The track date over here was the exact date I added the stock to the portfolio. So that SY we talked about earlier went in on 625, okay? But you can see the top stocks here are looking pretty darn good. They've made some really nice moves as opposed to these value stocks over there. As I often say, or used to say at least, someday I'm going to create a system that requires stocks to have poor fundamentals. And somebody emailed me and said, I believe you already have. So if you go back, let's see if we have it in here. I think it's coming up. Now, let me just backtrack for a second. A company is a physical entity. It's made up of assets and a building or buildings, likely. They manufacture something or create something or provide a service. They have employees. So this whole conglomerate of things, I guess, so to speak, makes up a company. And a stock is a piece of paper, or used to be a piece of paper. Now it's a digital blip, which represents ownership in the company. It's two different things, okay? One is physical and one is intangible. But when you buy a stock, you're forming a relationship between you and the company, okay? And this is from Tom McClellan, as you'll see in 1 second. And as a general statement, the company has your best interest in mind, okay? The company wants to enhance shareholder value. Now, every now and then something nefarious goes on or some nefarious players get involved. I've gotten whacked on a couple of Chinese stocks fairly recently, and it's got me kind of scratching my head on that. And some of my clients are done with them already. I'm not completely done with them because I'm a purist when it comes to markets. And I think my clients are expecting me to be a purist and not create excuses for why or why not to take a particular stock when the setup is there. And I hate to use the word hope, but hopefully, because of this recent rash of these stocks getting whacked, that they will look into what's happening here. And it sounds like they already are. But anyway, the point I'm trying to make is you're forming a relationship between you and the company. And it's a general statement that company has your best interest in mind 99% of the time, okay? But what people fail to realize is you're also forming a relationship with anybody who bought the stock prior to you. And Tom McClellan went on to say, and those people will screw you. This was at the American Association of Professional Technical Analysts. Easier for me to say. I usually say AAPT or APTA. This was at an APTA meeting back in New Orleans, probably a decade or so ago. But I really liked Tom McClellan's presentation. He just kind of brought it back to the basics and how you need to think about things. And I emailed Tom, as I've said quite a bit, and said, Tom, I've been using using quotes from your presentation quite a bit. I really enjoyed it, and I think it's something that the masses really needs to hear. And this quote has been around forever, and I've heard it many, many times, but I hadn't heard it up until this point. And then Tom McClellan went on to say, he goes, well, as far as quotes, here's another one from my late mother, Marion, regarding market timing. And this is one of the most famous quotes ever. Everyone uses timing in their investing. Some people buy when they have money and sell when they need money, while others use methods that are more sophisticated. Now, keep that in mind. I mean, everybody's looking for logic, okay? That little meme, like just buy good companies, okay? Well, sounds good on paper, but the market doesn't work like that. That's not how this works. That's not how any of this works, Beatrice. People buy and sell stocks for a variety of reasons, many of which have absolutely nothing to do with the underlying company. As I've said quite a bit, friend of mine, Dick Fruth, he's running, I don't know how much he's running now, but it's in the hundreds of millions. But years ago, when he started off as a broker, he's a little older, people actually held the shares in their home or safe deposit boxes, and they would actually bring the shares in to sell them. And the curmudgeons in the office, as Dick called them, would just snatch the shares away from them and give them their ticket or check or however it works back then. And Dick's a little bit more gregarious. He would sit them down, get a cup of coffee, and chat him up a little bit, and find out why you're selling. Well, I'm getting married, I'm getting divorced, or whatever the case may be. And his point was that he rarely, or I don't know if it's, I'll have to check his book, but rarely did the person say anything to do with the company, if at all. So that's always in the back of my mind. And over the weekend, my wife's been telling me for probably 2 years. So, guys, listen to your wives. She's been saying that day the floors can just fall out of our shower because it's got had a soft spot. And I explained to her, no, it has waterproofing under there, and that's just a little soft little tile. It's not a soft spot. And the thin set is washed, or the thin set or the mortar has washed out, and we'll take care of that someday. Well, it's kind of a long story, but one of my neighbors was passing, and somehow we got on the subject of his house because a few years ago he had a leaky toilet that got underneath the floor, and it destroyed his entire floors. And $35,000 later, I forget what it was, but he had to take out the whole subfloor and everything. So my wife's like, one day we're gonna fall through that shower, and she said, tomorrow, this is last Saturday, you're gonna crawl under her house and see what's going on. I'm like, all right, do as I told. And this is what I found. And as I'm laying on my back, I'm thinking, okay, well, we're well out of warranty, so how am I going to pay for that? Well, I'm going to have to likely, let's see how much damage is. Let's see if it's just small area, no big deal. But if it goes on much further, then I've got a big problem on my hands. So far, we're $600 in the hole, and that's just for the tile. And that has nothing to do with the repairs, which are going to be substantial, I would think. So I'm thinking, where am I going to get the money? I don't know how much cash I have on hand, but I'm likely going to have to pull money out of a trading account, okay? And since I've been mostly allocated as of late because the market's going up, I might actually have to sell some stock. So what does my selling have to do with anything? Absolutely nothing, because I ignored my wife and let a small problem become a big problem. I might have to sell some stock. And you've got to wrap your head around that. And I'm always thinking about markets, obviously, other things too, but mostly markets. But I always think whenever I make a decision that has nothing to do with the markets, needing some money, and selling stock, for instance, because of a floor damage or whatever, it always makes me realize how markets actually work. One of my favorite sayings is, don't confuse the issue with facts unless you're Bill Clinton. What is the price of the stock, the ask, is the lowest amount that someone will sell it to you. The value of a stock, the bid, is whatever someone is willing to pay for you. I'm glad I used the word value in there, because the value of a stock is whatever the value is. So what makes a hot stock? So we don't know what makes a good stock. Maybe let me know what makes a good stock, okay? But I don't know what makes a good stock, but I know what makes a hot stock. A hot stock is a stock that looks like that. So the question is, do you never use fundamentals? Well, the short answer is yes. I do not use fundamentals. Now, with that said, after checking price, if I have a setup, I will occasionally ask, what's the story, fad, or glory? This is especially true with IPOs, especially for the pioneer setup, okay? The example that I've used there ad nauseum was during the pandemic, Academy Sports setup, ASO, I think it's a signal there. And I didn't take the pioneer setup, but once it pulled back, I was like, well, you know what? I can't imagine buying a brick and mortar stock, okay? I mean, come on, brick and mortar is dead, right? Well, it turned out to be one of the hottest stocks in the portfolio because I didn't know it at the time, but everybody was getting sick of being inside. They started rushing out and buying kayaks and sporting equipment and stuff so they could go out and enjoy the outdoors. Peter Lynch wrote a book many years ago. It's one of the first ones I've ever read, back in the 80s, I believe, is when I read it. And his point was, his one up on Wall Street, from what I remember, can be summed up like, if you're seeing some sort of trend, then it might be worthwhile. Now, again, I will think like that a little bit, but only if I first confirmed it with price. And we had I forget the name of the stock, I was trying to find it earlier, but there was a stock that made hair care products for women. And it was set up, and this was after we were in it. One of my clients sent me a picture from his shower, and there were like 3 or 4 bottles of this stuff in the shower. And I also looked up how expensive it was, and it's just like $50 a bottle or something ridiculous. And I asked my wife to ask her hairdresser, which is a friend of ours. She does it part-time. Whenever she needs a pair of shoes, she cuts somebody's hair. But that's another story altogether. Anyway, she asked her about it, and she's like, "Oh, I love those products. You know, they're expensive, but I love them." I was looking at, I think it was Buckle jeans years ago, or Bugle or Buckle, I forget, Bugle maybe. And it was a nice little setup as a pullback, and I took the trade, and I asked my daughter, teenage daughter at the time, like, "Have you ever heard of those Buckle jeans?" She goes, "I love them," and she thought she was getting a pair. So her excitement kind of confirmed what I'm saying. So I think it's okay to look at themes like this, provided, of course, you're looking at price first and foremost. So in the IPOs, again, I like to ask, what's the story, fad, or glory, if I'm taking a pioneer setup, meaning that I'm getting in maybe as soon as day 5 on the close. I like to know that there's something there that could be some sort of catalyst. Now, I don't factor that in directly, and again, I'll wait for a secondary setup in the IPOs. But in a regular stock, I really don't care, okay? But there is a little something there, but you got to be really careful with it. And I'll give you an example. I was almost hesitant to talk about this today, but I want to concede that there's a tiny bit of what could be seen as maybe fundamentals that I might use. Years ago, many years ago, I used to sailboat race, and I think on one of these ocean races, I was asking a guy, he's a veterinarian, I was like, "Is there anything you see in your industry that you find interesting?" And this is before I became really heavily into the technical analysis, and I was just learning technical analysis at the time. And he said, "Yeah, these little test kits. It used to cost us about $30 to do a test. You take the blood from the dog or whatever, you send it off to a lab, and then you get it back later, 2 or 3 days later." He goes, "Now we have these little tests we do in house. These tests are like $2 each. I think we charge them $20 for the test. Takes a technician about 10 minutes or 5 minutes or whatever. They get the results fairly quickly." He goes, "I love these things. We're doing a lot of tests, and they're wonderful." And it was really good for him. Whereas the old way, they would probably scratch out by the time they went through all the hassle of mailing it off and getting it back and all that other stuff. And the new way, they've become far more profitable through these tests, and the client is happier because they're paying up to half less, even though the markup is still a little ridiculous. Longs or inlets, the setup was there, the stock was there, and that was a big winner. based on that. Now, those don't come along every day, okay? So I am saying there's a tiny bit of that story, fad or glory, although I don't know what, I don't think there's any story of fad or glory with any stocks in the portfolio right now. But every now and then again, I will look into it, especially again with the Pioneer setup and an IPO. Now, never forget, you're trading traders and not markets. And as Tom McClellan said, and those people screw you.